2, 1.
Hello and welcome to the Fintech Show. Now, on today's episode, we're going to be hearing from organizations that are absolutely minting the crypto compliance scene. We are going to be looking at how regulators, tech companies, and exchanges are taking a Wild West and making it a thriving ecosystem that will fulfill its manifest destiny. As the crypto industry asks itself some seriously grown-up questions, we find out about how this moment could actually be its time to shine. In this globe-trotting adventure, we travel far and wide to find out how the world is looking at rewriting the crypto regulatory landscape. We traveled to one of the largest finance conferences in the world, Money 2020, over in the city known for taking risks, Las Vegas, to speak with a company called Trulioo that is dedicated to reducing those. We caught up with Michael Ramsbacker over in the Mirage to get the lowdown on the very real use cases that digital identity and knowing your customer going forward. FF News' own director, Ali Paston, headed over to meet Coinbase's Tom Duff Gordon in London to find out how contemporary policy overtures are changing the way exchanges look to the future and interact with their new customers. One thing's for sure, these organizations are fully invested in ensuring that they are not just compliant, but also future-proofed to further regulations. And joining me here in the studio is Phillip Silitschanu from IDC, who's actually dialing in from the very lovely Barcelona. Now, Phillip Silitschanu is the research director for IDC Financial Insights, and he's responsible for worldwide blockchain, crypto, and NFT strategies. So I'm actually pretty eager to hear his perspectives on the industry. So without further ado, let's not keep him waiting. Phillip, how are you doing? You good?
Great, thank you for having me.
To set the scene then, Phillip, the crypto industry has gone through a wealth of changes in the last couple of years, I think it's fair to say. So what has been the biggest milestone for you?
There's no one particular landmark, but it's around 2017, 2018, when you start seeing a lot of the institutional companies in financial services and markets and banks really begin taking it seriously. Right, where they began saying, okay, we should probably look into this. We probably need to start planning for this. This has legs. This isn't just this sort of, hacker in the basement kind of weird gamer thing that they're just, moving around, digital money, whatever that is, right?
Yeah.
This is something that may actually be around to last. Conversely, you could also argue that at least in the U.S., in the United States, it was the Securities and Exchange Commission, the regulatory agency, sort of putting a stake in the ground, albeit sort of a very small stake, unfortunately, but putting something out there that says, okay, this is how we're going to treat cryptocurrencies as a security, as an investment for now. And that for now is the big question, which I think we'll get to a little bit later.
Do you think that regulations and policy might have swung the other way and been a bit too restrictive?
Crypto is still a nascent industry. People often make allusions to kind of 1990s internet, and I think that's probably right. I was pretty young in 1990, so I'm not sure I can kind of be the expert on this. But for all kind of nascent industries, they start being unregulated. And then obviously as adoption grows and risks become more apparent, and we realise that we have to protect people, as well as fostering the innovation, we have to start to think about bringing in kind of rules and regulations. So we're moving slowly and steadily from a world which has been kind of less regulated into a world which is being more regulated. So that is certainly happening. And we're seeing that, as I've said, at the kind of country and regional level, but we're also seeing it at the global level. I think your question also gets at a really interesting tension, which I remember seeing in my past job as well, which is a tension between, assessing, an incident and then trying to regulate for that, looking backwards but not over-regulating. And there's a tension between, does the pendulum swing too far from kind of one side to the other side, and you end up having a slightly disproportionate regulatory response to what you've seen. And I think that's a little bit the challenge that we have now, which is we've got to learn the lessons from Terra Luna, from Celsius, from Three Arrows, from the SBF, but we've got to try and draw the right smart conclusions such that, you know, the regulation that does come doesn't become too much of a kind of a constraining force on some of the innovation, because there are huge opportunities for people to be more included in financial services, for financial services to be cheaper and more effective and more efficient. And so we've got to allow people to continue to engage with the sector, but whilst we try and, you know, weed out some of the bad actors and some of the bad technologies, which I think is a process that we're going through.
Would it be fair to say that a couple of years ago, the cryptocurrency space was a bit of a Wild West?
Yeah, I think there's still that Wild West element. And I think, however, the majority of crypto transactions take place on the largest exchanges in the world. And those are the exchanges that maybe years ago were practicing regulation arbitrage, if you will, locating in countries where maybe the regulations weren't as advanced. But I think those days are gone. All of those exchanges are really embracing the regulations.
Will strong KYC and AML compliance in the cryptocurrency space for the crypto exchanges usher in a new era for the industry?
Yeah, I think it looks a lot like banks and more traditional payment systems. The regulations around banks and their onboarding processes are there to protect consumers. And I think for crypto to become more mainstream and start to attract the non-promoters, if you will, or the detractors of crypto, that the onboarding processes and the KYC should look more like traditional finance.
One thing I think would certainly play a big role in that is digital identity, you know? We've had Web 1.0, Web 2.0, now we're seeing this phygital space, and surely digital identity could be the cornerstone to enable that, right? That's going to take away some of the nefarious activities when it comes to crypto, surely.
Absolutely. You know, it's funny, I was having a conversation with one of our clients a few days ago, and in the course of the conversation, it sort of dawned on us that we live in an almost entirely digital world when we think about it, in terms of the exchange of value and information.
Yeah.
Right. I mean, all my TV shows I get digitally through a digital subscription. All my news I read online for the most part.
I just bought a book off an application, so even that phygital space is digital.
Exactly. Exactly. Right. Except for, I mean, all our banking and finance and payments are digital for the most part. I mean, I know very few people who even carry real cash around, right? And if they do, it's for emergencies.
Yeah.
Ironically, they usually keep it stored in the back of their iPhone case. So if they lose their one source of digital money, they also have lost their fiat physical money. So
wow. Yeah.
But almost everything is digital except our identity. Pretty much every government still makes us walk around with a piece of paper or a piece of plastic that says who we are. And we really have not moved forward from that. And I absolutely think that, especially with the rise of NFTs, and personally, IDC sees NFTs as the killer app of blockchain that will really bring blockchain into the sort of blockchain 2.0 world, so to speak. But digital identity is sort of a logical extension of what NFTs are at their core, right? Yeah. I mean, let's put it this way. We open up a bank account, we open up a trading account, a brokerage account, we do everything digitally, and then we scan a image of our physical identity to digitize it, to then send it for them to then physically verify a digital copy of a physical document. It's like,
are you seeing crypto exchanges finally waking up and trying to get ahead of the curve when it comes to navigating the quite complex AML and KYC processes?
Absolutely, yeah. Exchanges come to us for a couple of reasons. One is they want to get ahead of the curve on the regulations, and Trulioo can help them optimize their KYC processes to get as many people through the funnel as possible, match rates, if you will, while still collecting the necessary information and checking the appropriate data sources for the compliance factors in their countries and use cases.
How can exchanges tackle the darker side of the industry?
Yeah, we've been talking about identity verification and KYC processes, but kind of part of that funnel is AML, anti-money laundering regulations. And crypto exchanges use companies like Trulioo for watch list screening to ensure that the people that they're onboarding to the platform, they might be real, legitimate people, but they also might be on a watch list, a sanction list. And so the exchanges also need to make sure that they're keeping bad actors off the platform. And so platforms like Trulioo can also screen those people for sanction lists, adverse media, and also identify if they're politically exposed persons. And so I think it's important that exchanges also think about monitoring the people that are on their exchanges in kind of a continuous fashion. So Trulioo has a product where you can screen somebody for a watch list, but you can also continually monitor for a change in that watch list status.
Does the decentralized nature of crypto mean that KYC and AML checks are impossible? I mean, is the only way to do those on the off-ramps and on-ramps?
I think mainly applicable and most easily applicable on the on-ramps and the off-ramps. So as a centralized, crypto exchange, we've been applying, kind of AML and KYC checks consistently and robustly, as you can imagine, across all of our different operations. I think, there is an issue where we've got some jurisdictions around the world where some of those checks don't exist, or perhaps they exist, but they're not being supervised and enforced enough. And I think that's a problem, and I think that probably has to be ironed out such that we have kind of harmonization. When we talk about more DeFi and kind of decentralized kind of services, that is kind of going to be harder. And it's there, I think, where we look forward to technologies like decentralized ID to try and square the circle between being able to interact with decentralized applications in a way in which you can retain more control over your own data. You've got a higher level of kind of privacy. You're not giving everything away for somebody else to monetize, right? And so all of the promises of Web3 and decentralization, I think, will be kind of brought about with things like decentralized ID, such that we can then make the regulators comfortable that the basic sanction screening that probably ought to take place and basic kind of KYC and AML checks can happen, but they can happen in a way which is consistent with the kind of the promise of a new kind of version of the internet where users are more in control, and that where people do not have to give up as much identifiable information, they don't have to. And so I think verifiable credentials and some of these other technologies that people are thinking about are going to play a big role in that future, where we try and square the circle between ensuring that we have good actors participating in these kind of products and services, but also ensuring that individuals are able to retain more control over their data and higher levels of personal privacy.
We've been talking about what identity verification means to the exchanges and the crypto companies from a compliance factor, but when you talk about retail consumers that are creating these accounts on the exchanges, the identity verification is important to them because it creates trust and safety on that platform. If you're going to host your wallet with an exchange, you want to know that that's a reputable company that is going to keep your account and keep your wallet safe, because they hold your private keys. If that exchange were to go out of business, your private keys are potentially lost, and this has happened before. And so I think for a consumer, they should be doing business and crypto investing with platforms that embrace KYC because it creates the trust on the platform. And so the trade-off there is friction, right? You may have to provide your name, your date of birth, perhaps your address. Maybe you have to provide your government-issued identity document or a biometric. But that's to protect the platform and protect that investor.